Are we about to see the end of the US dollar as a paper currency, or will independent cryptocurrencies like Bitcoin become the future money? We'll talk about the fight between the digital dollar and cryptocurrency in this movie, looking at how these two new technologies could change our economy. What will happen to your money, privacy, and financial freedom if one of these wins? In barely over a decade, cryptocurrencies have risen from digital novelty to trillion-dollar technologies that could destabilize the global financial system. Many investors now hold Bitcoin and hundreds of other cryptocurrencies as assets and use them to buy software, digital real estate, and illegal narcotics. Cryptocurrencies democratize money generation and control from central banks and Wall Street, according to proponents. However, critics claim cryptocurrencies enable criminal groups, terrorist organizations, and rogue nations, exacerbate inequality, cause market instability, and use a lot of electricity. Some governments allow cryptocurrencies, while others ban or restrict them. In January 2024, 130 countries, including the US, considered implementing central bank digital currencies to compete with the Bitcoin boom. What are cryptocurrencies? Using encryption to issue virtual money, cryptocurrencies are traded on decentralized computer networks between persons with virtual wallets. Distributed, tamper-proof blockchains record these transactions. This open-source technology avoids coin duplication and eliminates the requirement for bank validation. Bitcoin, founded in 2009 by Satoshi Nakamoto, is the most famous cryptocurrency, with a market worth of over $1 trillion. Many others, including Ethereum, the second most popular, have grown in popularity. Funds are transferred between cryptocurrency wallets. The network confirms these transactions a block of numbers. Users can remain anonymous on blockchain since they only record digital wallet transfers. Privacy-focused cryptocurrencies like Monero claim to offer more. Once a wallet owner is identified, their transactions can be tracked. Bitcoin miners earn coins by solving complex math problems to organize these blocks, validating network transactions using proof of work. Many cryptocurrencies use this method, but Ethereum and some others use proof of stake. Every 10 minutes, a transaction block is added to the chain and new Bitcoin is awarded. Bitcoin has a 21 million coin limit, but not all cryptocurrencies do. Bitcoin and other cryptocurrencies' pricing depend on worldwide demand and supply. However, some cryptocurrencies, called stablecoins, are backed by other assets and pegged to a traditional currency like $1 per coin. However, a wave of volatility in 2022 knocked many of these currencies off their pegs. Why are they popular? Once considered a tech evangelist hobby, cryptocurrencies, particularly Bitcoin, have become mainstream and worth trillions. Bitcoin reached $60,000 for the first time in November 2021, but it has since plummeted. The Pew Research Center anticipated that 17% of US adults have invested, traded, or used cryptocurrencies by mid-2023. Cryptocurrencies are popular because they can be transferred fast and anonymously, even across borders without a bank to block or levy a fee. Bitcoin has been used by dissidents in totalitarian nations to dodge US sanctions on Russia. Some researchers believe digital assets are investment tools. People acquire cryptocurrencies because of a speculative belief that these tokens are going to go up in the future, because a new future is being built on the blockchain, says CFR senior fellow Sebastian Malaby. Bitcoin supporters see it as a hedge against inflation since its supply is fixed, unlike fiat currencies, which central banks can extend endlessly. However, once Bitcoin fell amid stock market turbulence in 2022, several analysts questioned this claim. Other cryptocurrencies' valuations are difficult to understand, but many are linked to digital asset projects. Dogecoin, a joke cryptocurrency, has gained value in high-profile investors. Bitcoin is popular among populist leaders in Latin American and African countries with weak currencies. Central American University found that less than 15% of people had utilized Bitcoin to pay taxes or settle debts in 2023, despite El Salvador becoming the first country to do so in 2021. Some observers believe Bitcoin and other cryptocurrencies are unusable for transactions due to their price volatility. Some businesses take Bitcoin, but most consumers and sellers don't willing to accept something whose value can vary daily. Experts suggest stablecoins may be better for payments than other cryptocurrencies. Stablecoins can be delivered instantaneously without credit card or Western Union transaction fees and have a consistent value. Stablecoins can also be used by anyone with a smartphone, allowing millions of people without bank accounts to join the financial system. However, regulators have heightened monitoring after numerous stablecoins fell below $1 amid 2022's market turbulence. What's DeFi? Cryptocurrencies and blockchains have created decentralized finance, DeFi businesses and projects. DeFi, the cryptocurrency equivalent of Wall Street, provides financial services like borrowing, lending, and trading without banks and brokerages, which which charge high costs. Instead, smart contracts conduct transactions under particular conditions. Ethereum powers most DeFi apps. Besides cryptocurrency, blockchain technology can track transactions, which experts think could help international trade. You can imagine a new kind of financial system being constructed out of blockchain-based tokens that have advantages over the old centralized kinds of money, adds CFR's Malaby. You trust the code, blockchain, and decentralized ledger, and it's a new finance system. Are cryptocurrencies still the future of money? What challenges has this created? Governments now face new issues like crime, environmental damage, and consumer protection due to cryptocurrencies. Illicit activity. Recently, fraudsters have increasingly used ransomware to enter and lock down computer networks and demand cryptocurrency to restore them. The U.S. says drug cartels and money launderers are increasingly incorporating virtual currency into their operations. Drug Enforcement Agency. U.S. and European authorities have shut down darknet markets, where anonymous users can use cryptocurrencies to buy and sell illegal products and services, mostly narcotics. Critics argue these enforcement attempts have failed, as a North Korean hacker outfit stole over $1 billion in cryptocurrencies in 2022. Terrorism sanctions evasion. The U.S. has unmatched capacity to impose punishing economic sanctions, which Iran, North Korea, and Russia are increasingly utilizing cryptocurrencies to avoid. Terrorist groups including Al-Qaeda, the Islamic State, and Hamas military arm also trade cryptocurrencies. Bad for the environment. The Bitcoin network uses more electricity than several countries for mining. This raises concerns regarding cryptocurrency's climatic impact. Some cryptocurrency supporters claim renewable energy can fix this problem. El Salvador's president has committed to mine Bitcoin with volcanic energy. Ethereum's energy-efficient proof-of-stake methodology was purportedly driven by environmental concerns. Non-regulation and volatility. Cryptocurrencies and DeFi companies are growing rapidly, causing billions of dollars in transactions in an unregulated industry, generating concerns about fraud, tax evasion, cybersecurity, and financial stability. If cryptocurrencies dominate global payments, central banks, especially in smaller nations, may lose their capacity to determine monetary policy through money supply control. After excessive volatility lowered the value of some significant cryptocurrencies in 2022, a few crypto firms were unable to repay their loans, mostly other crypto firms. The third largest Bitcoin exchange, FTX, filed for bankruptcy along with many borrowers and lenders. Though traditional financial firms were unharmed, the bankruptcy of FTX and other firms cost investors tens of billions of dollars and prompted some experts to call for a crypto ban. How are governments responding? Many governments have ignored crypto, but its rapid growth and DeFi's ascendancy have compelled authorities to start writing guidelines. Cryptocurrencies are legal in some countries but banned in others. Experts say policymakers must curb traditional financial dangers without strangling innovation. U.S. regulators are regulating various cryptocurrencies and DeFi. In January 2024, the SEC approved the first Bitcoin exchange-traded funds (ETF), allowing Bitcoin into the traditional securities market. However, cryptocurrencies do not fit neatly into the legislative structure, generating ambiguity that politicians will likely have to resolve. Chairman Gary Gensler has termed the cryptocurrency sector a Wild West, comparing it to the 1920s before securities regulations were enacted. He has urged Congress to grant the SEC more authority over Bitcoin and other cryptocurrencies. Federal Reserve Chairman Jerome Powell and Treasury Secretary Janet Yellen want stricter stablecoin regulations. Regulators have been reluctant to offer crypto investors deposit insurance or other protections. Christopher J. Waller of the Federal Reserve Board of Governors remarked in 2023, "If you buy crypto assets and the price goes to zero at some point, please don't be surprised and don't expect taxpayers to socialize your losses." Authorities have targeted cryptocurrency exchanges that convert cryptocurrencies to US dollars and other currencies to restrict illegal activity. Major exchanges like Coinbase and Gemini follow Know Your Customer and other anti-money laundering regulations under regulator pressure. Most cryptocurrencies are traceable, thus law enforcement and intelligence organizations are using blockchains to evaluate and track illegal behavior. FBI recovered part of the Colonial Pipeline hackers' ransom. The Treasury Department cracked down on cryptocurrency mixers, which criminals used to anonymize blockchain transactions in August 2022, calling them a threat to U.S. national security. Most Bitcoin mining is done in China, which has actively cracked down on cryptocurrencies. After Chinese authorities banned all crypto transactions and mining in September 2021, various coins plummeted. The Atlantic Council reports that 8 countries, Algeria, Bangladesh, Bolivia, Morocco, Nepal, Pakistan, Saudi Arabia, and Tunisia, have banned cryptocurrencies, while dozens more have restricted their use. However, crypto exchanges have made tens of billions from nations with cryptocurrency bans due to enforcement issues. Most other governments have chosen a restricted approach. What is a central bank digital currency? Many central banks, like the US, assert sovereignty. Federal Reserve may introduce a central bank digital currency. CBDCs offer cryptocurrency speed and benefits without the hazards, say proponents. CBDCs are being investigated by scores of nations, representing 98% of the world economy. CBDCs are operational in 11 nations. 10 Caribbean countries, Nigeria is 11, are low income. China started counting its piloted CBDC in official currency circulation calculations in 2023, even though it made up only 0.1% of central bank cash and reserves. Federal Reserve officials disagree on the necessity for a digital dollar. CBDCs might be implemented by giving citizens central bank accounts (BDF). By crediting stimulus payments and other benefits directly to people, governments could manage the economy more effectively, and CBDCs would be safe digital assets with the central bank's approval. Experts warn that centralizing so much power, data, and risk in one bank might compromise privacy and cybersecurity. CBDCs could replace commercial banks as middlemen, but these banks create and allocate credit, therefore some experts worry. Direct banking with the Fed would require the central bank to either facilitate consumer borrowing, which it may not be able to accomplish, or discover new credit injection methods. For these reasons, several experts advocate private, regulated digital currencies over CBDCs. If you found this breakdown helpful, don't forget to subscribe and hit the notification bell. Join us for more deep dives into the future of finance and stay ahead of the curve with the latest insights on digital currencies, investing, and more.